Yes, GJ, of course I'm here. Just setting up here. All right, let's get going, folks. Let's see here. All right, so kind of a somewhat strange response here. I guess the last shoe is to drop here later today. I guess we find out as far as the other Senate seat, what Congress is going to do, and whether this is going to be a country controlled by Democrats and socialists and extremists. And so we'll see how the charts begin to play out. It's kind of weird. Tech is rolled over here. I'm surprised the oil is going up. And well, it's going to be a new world. And what that means to the markets, I guess that'll play out in the next couple of weeks to really see what's happening here. So we see the S&P is just kind of hanging here, I guess, waiting for like I said, the last shoe to drop. And market's been losing momentum for a while, but it hasn't broken the trend. Just looking at the S&Ps here, we know that the transports did, and we'll see how they react today. But those of you that may use some kind of indicator like MACD or something else, you probably see that it's rolling over, but the trend hasn't violated. You see the highs are getting closer together. We've got this red bar, and with the Nasdaq dropping like it is, it's surprising, I guess. Well, uh, the financials are holding up here, and I guess they figure, hey, they're going to print more money, and more liquidity, and maybe that means the market doesn't drop. It's kind of a really weird situation. So I'm thinking it's going to take another week or two to really see what's. Yeah, I see interest rates are up. They're popping here, and that's actually a good thing. So, I mean, as far as the yield curve goes, and maybe I have a chart of that on a different page. Let's see what I have here. Nope. So, and this is a more long-term thing to look at, but these are the different yield curves between, different, yields. And this is the tightest 3 month versus 5 year. And you could see it's not far away from the zero line. And this is something we'll be keeping an eye on this year. Um, so as the liquidity started being pumped into the markets, these came off being inverted early in the year, right? And so they're not far from zero, but they're still, in a range that says long term the markets whatever buy the dip, whether that's a 10% dip or 15% dip, whatever it is. These aren't down below zero, so historically that means look, we're not going to have a bear market type of thing. But I said earlier, last year, keep an eye on a 3 month. We'll see, if they start to move up, and if the long term starts to move down. And now, so far this morning, anyway, you've got intermediate to short term interest rates up, and so bonds have to be down. There's ZB starting to break down below this base that's been on for a couple of months now. This pivot low is the last stop. Is today a fake out move? I don't know. It's kind of like here's the news. Things are, this Senate seat by I don't even remember his name. Very extreme guy. How a guy like this How'd any of these people become congressmen or senators? The woman with the turban on her head, these other wackos. Um, you know, you know, they may have different views. I see this country is starting to slide down, the rabbit hole, and with situations like that. And so it's weird, but markets do crazy stuff. So we all have to be a little careful as to our personal opinions driving our trades a little too early. And that's what I'm saying. I think we're going to need a little bit more time to see how this really shakes out. Um, but this beginning to drop, as weird as it might say, how could anything positive come out of, Democrats running anything? I don't know. I think it's too early. But the fact that bonds are starting to move down here, and you can see, TBT, the interest rate ETF, is moving up, and it's been in a trading range down here for quite a while and hasn't broken out above 18, but it's the beginning of it starting to move up, which is that yield curve chart that I showed you, is going to move further up as the distance between short and long-term interest rates expand. And that's the reason financials are doing okay this morning, and they started doing well, other than looking at XLF, which this looked like okay, it's ready to take off, but then yeah, a couple of days ago, it came in like this. It didn't violate support, and now it popped up to 30, so it's gapping up. So those long-term interest rates are going higher, and that's helping this, and that should continue to help drive this higher. um, that's a plus. On the other hand, what markets go very far without tech? And you can see the NASDAQ 100 here having the most negative reaction, breaking below the prior swing low over here. And it's not, after getting down here greater than 100% retracement, uh, it's stabilizing, but it's not ripping back up. So, I mean, that's a negative. And we see this weekly chart. We still got obviously a few days, 3 days, for this to make a turn. It's in an uptrend. It'll take a lot to turn this down. But hey, the big pullbacks begin with a reversal, and this reversal here is one in which we spoke about yesterday. A little consolidation, breakout like this, and now it's down below the low of the breakout bar. That's how corrective moves begin, and how an uptrend in the smaller time frame can turn into at least a sideways trend. Now, the way I look at things is I'll call this a downtrend if it breaks below 12,200, even though it doesn't have lower highs and lower lows yet. So we've got one pivot, two pivots after a new high, and breaking below here, we're going to see this market go down more. Well, down more. What does that mean? Well, we'll play it as we see it, but we look to the left, and we'll just see how far it goes. But down here is certainly a good possibility. SPX today. Well, let's see. 37.75. 37.75 has big open interest. So look at 37.75 and above. Start there. That's your largest open interest. If see if it has. No, it doesn't have any significant juice there. It's probably not going to. So um, to get above the low. Yeah. Low Monday's low 36.40 or so. 36.40. just looking at that. Hold on. Just looking at the NQs, I would just go as low as possible. You know, you can get down to 36.20, and that's what I would be looking for down here, right? Something that, things really get nasty. You're down near 3600. This big bottoming tail bar. You've got this low. You got this low, and so 30s. Wow. Personally, I'm not going to do this today. I don't know. I have to see how things start shaping up. Um, just looking at the futures here, where they're holding. I'll advise in the room, but come on, can I grab that? You can see down below, there's nothing down below here. So you've got a real danger. And so if the S&Ps drop down here, look at the call side. And look over here, an SPX, so the numbers match up. Um, you know, 37.40. This begins to drop down into here. I would go above 37.40. 37.75. 37. Okay, so way up there. If there's juice up at 37.75, I would think that is a no-brainer if this starts to drop here. 37.60. Okay. Well, we'll assess first thing, in the first 10, 15 minutes or so, the jiggles. Looking at the NQs, I'm interested to see if these can lift off at all. They're getting rejected, as it hits this little resistance area right there. Um, and the Dow is sitting here like no big deal. And the Russell, just popping up now. Again, as I said, I want to see some information, and that may be all day to get a bias of a bigger picture. Because this is in an uptrend and bullish, and obviously tech is going down. And while they can go in opposite directions, this isn't going to soar while tech is going down. It may grind, but if this turns into an M top, and we've got the transports here that have rolled over, I don't see what interest rates do as far as whether this TBT move starts to turn out to be some kind of a failure where it breaks up. Then I think it starts to become, sell short city, and but I'm not certain about it yet. So that's where I am at, and need a little more information as to the longer term picture, how things unfold in the next half hour or so. Well, that'll be fine for me as far as day trades and what I think as far as what that goes. So intermediate term, uh, you know, already gone over. Sentiment is got gas in the tank to drive this market lower. Breath has been deteriorating, but that kind of helps a little bit as far as the downside of the market. But it's not so clear a picture right at this moment, but it will get clearer by the end of this week. All yours, Dan.
All right. Good morning. Yeah, yesterday in my nightly video, I said I have no idea what's going to happen today with the broader markets, the sectors, and wow, it. And we were talking about this yesterday. Marijuana stocks, other things that would benefit, that would either go up or down based on the likelihood of, them taking the Senate. That's so it's playing out, and that's what we were concerned with. Yeah, that's what I was just going to say. So, I mean, we got into a bunch of oil stocks, we got into marijuana stocks, we have a bear call on solar. We were in, so that's our only position in pain today. That's it. I mean, we entered that as a bear call credit spread. Um, so that we're just going to apply our rules here. Let me get my screen up. So TAN, we sold a call spread on this gap to resistance under the low. It was, look at this thing rally. I mean, this look at the monthly, and we're technical traders, and this everybody and their brother knows that these are going to benefit with Biden, and now we're getting another big old gap. That's extended but strong. A lot of these, and when I was having lunch yesterday with my trader friend, I said, you know what? I think I finally understand why the market seems to not care, at least, as of yesterday's close, about this election. Because I said, because the Dems are just going to go on a spending spree. They're going to give more money, handouts. They're going to spend it on infrastructure. All their initiatives is just going to keep the spigot flowing. But yeah, very interesting here. Um, Q's down, IWM ripping to the upside, and that's the bias of small cap and spending and banks and so forth. Uh, did you adjust your screen? No. Um, Unless I'm showing the whole thing. Oh, full screen. All right. Got it. Thanks. Hey, Steve, your drop down, please. Um, you know, you hear me saying all the time the story that the media just keeps pumping in your face. Whatever happened in the story about Elizabeth Warren gonna just come after and destroy the banks? Well, this sure doesn't look like there's much fear of that. Goldman Sachs, we're in a recession, nobody wants money, businesses going out, and Goldman at all-time high. Don't ask me to explain that.
because the yield curve. It doesn't mean when these Dems get in, if they do, that your best friend that's on the banking committee, Maxine, isn't going to do what she promised several years ago. So, what was your comment? I'm going to do to them exactly what they did to us.
Okay,
You
but
didn't
that's
say that
kind of
with a nice face.
but that's what I'm saying. So why is Goldman at all-time highs? If Maxine and
Because the yield curve is widening and their profits automatically go up.
fine, but those profits are is a plus, and the negative is I'm going to come destroy you with
Well,
regulations.
talk is cheap.
And the
Let's
markets.
see what she does.
All right. So yeah, gaining stocks here. Um, yeah, I think McGraw mentioned this yesterday. It had a nice 15-minute chart. I wonder if they knew something ahead of time. But what I think it was, whatever the news is, some state is going to allow online gaming. But this is a nice term, McGraw. This would be a I mean, you're chasing as a directional, but Let's see if we can get a put spread. I know somebody mentioned dunking yesterday into the close also, and I just said, I don't know, this stock is on my do not trade list. And we've had a few beautiful entries and just get whacked. Like this was one we bought over this bar. Look at this retracement. Then we bought this one. Look at this retracement. It's like, God, give up on you. Dairy Queen here, gapping up. Nice, nice gap. That's worth watching. Dairy Queen. MSM. Also look at MSM. It's a bear 1, 2, 3. If it can trade under the week's low. At big old gap, 7's huge gap, so I wouldn't swing it. Something was up with it yesterday, obviously, but it's a bullish pre-market. Might set up as a day trade. SGH, no pattern, it's extended. I think this had earnings. Today, MT Live, we're going to be talking about our top patterns. This was a beautiful breakout right here. 100% retracement going sideways. This had earnings, no pattern. Oh, here was MSM. Like GBX, 33.74, bearish gap, but that's just in a big trading range. That was earnings also. Beyond got a downgrade, and we trail stopped out of our call straight at a gain yesterday, but this actually looks good for a day trade short. I like this one. Let me put it in a window right here. This, if it can just bobble around sideways for 15 minutes, let's say, that would be a beautiful one. A beautiful day trade short. FCell. Yeah, that's worth watching. Maybe for a long-term trade too, because I'm just looking at the monthly right here. It's worth watching. It's coming in right now from its pre-market gap. I'll keep an eye on it, Arun. SPR. Yeah, I like the 180 reversal breakout. Sure. Yeah, that looks good, Steve. It's relative strength with the market being down. Yeah, that's worth put that in a little window right there. Look at say it's beyond here, tanking right there. It's a matter of aggressiveness, but that was a nice pattern. I just don't trade in the first 5 minutes. The stock doesn't care what I want. But like I said, I wanted it to go sideways for a little bit and not bounce. Monica. Diego's asking CMCSA and Facebook. Intraday short. Let's see what it does here. That's right. That's on some horizontal support. It's bouncing. Let's just see what it does. Maybe 15-minute low.